So I want to post this script that's just a single order. It's a single drop. It's very spelled out what to do. And I set this order to risk 50 pips to make 100 pips. So I'm going to put this in the comments of this video. So the first comment, if you scroll by date of comment, because a lot of this crap on the internet's trying to help you by having the most popular comments. So at the very bottom of this video, or I'm going to put this in this MT4 script trading thing, is a single drop order, completely different than all those elaborate order banks that are hard written, so that this is a hand placed order here. You can't just double click this and it's going to jump on the screen, because it's looking for the tip of your mouse for the placement. So the really way to, I know it seems outlandish that you would buy a market as it's dropping, but I'm just trying to throw ideas out there so people can think beyond this one entry, this one girl they're stalking. You need to be a slut. You cannot just stalk one girl. I know the stalking concept, heard about it years ago. Well, stalk the market. I'm like, well, it's not working for me. I need somebody to rape right now, so that's why I turned to scalping. So the thing is here, this is a nice, you can decide right up front here, stop loss is clearly written. You change this number. I know it actually says 100 pips, and it means 100 pips on this script. These single drops are completely different. So this apparently is the trigger. I don't know what's going behind the scenes here, but this is why it I guess doubles execution of the whole script. Now, I did a little customization here. The next thing on this, well, here's obvious size, 1K. Slippage, I left at 3. I don't even know what that means. I don't know. I guess when you drop it on the screen, maybe. I don't know. Here is how long. So I put this at 12 hours because I figure I give it half a day to drop to get near my order. Now this doesn't have to be a limit order. This is not the same as the other one. You have to pre-program that whole array to come in at with a certain style. This is going to flip its style based on where you drop it. So this will actually, if your broker lets you trade inside the spread, you could drop this anywhere in the chart and it's going to come in at that level. Now here I changed, this is the one thing I added on here in parentheses. And I mean in quotations here, this is going to show up as a comment when you open up your trading terminal. If you turn comments on, you'll see this phrase come up. Now this is be set to 12 to show that it's that. Now if I drop it above, it's going to load as this buy stop. The script can, I hate to say the script can see the chart, but what's going to happen is the moment you drop it, if the value is higher than where we're at, it's going to automatically become a buy stop. And if your broker doesn't let you trade inside the spread, it will not drop. But the beauty of this script, it will not crash your platform. Now the other stuff, and the reason why some of those demos blew up, is because the broker only allows you so many. I've traded so many of these on different brokers, and some brokers have no limit. It seems like they have no limit to how many orders you can drop. Now that's a good thing and a bad thing. If you have there's it's almost 500 brokers out there now, so there's no excuse why everybody's not a billionaire like me, because you could just have all this stuff out there churning away. Every broker's got a rule system. So if the broker only allows you 100 tickets, then say you have you drop some outlandish script out there and the spread went wide and something went wrong, they're kind of saving you, because you can't just keep dropping the same order. This order here is the safest order, and this will run, I'm sure it runs, now I don't know, this will not run on MT5, I'm pretty sure of that. I don't know, MT5 doesn't take scripts. MT4, this is probably the last of, this is like just before open reel tapes went away. Just before 30 IPS became kind of, but so here we are on the 12-hour world, and inside the charting what I did was I tried to replicate this so I could gauge where to place this. So any currency pair, I've got every currency pair on the planet up here. So I'm going to make this as I'm going to post this as a comment, and then here is going to be how you would load this. You come up to, when you're inside of meta editor, you're inside of this. You've opened up this. You hit F4. So now you're in the meta editor. Can't see the title there. Now, since you're in here, what you're going to do is take what I did and paste it into there's may not be an existing script. So if you don't have an existing script, you're going to say new, and you're going to pick script. But I don't think it matters, but it's going to end up supposedly in the script branch of the library of the directories. And then go to here, and now just name it risk 50 to make 100 by what have you, whatever you want to see there, and then the time frame. Always put the time frame in there so I know how long it's going to last when I drop it. And then I go to finish, and it's going to come up with the standard, and I guess it's going to name it here. So it's throwing the name in for you. I would delete everything on here, and you could just do your own, or you're going to take off everything from here down. Delete that. Then you take my comment, the first comment on there should be mine, and then you paste it in here, and then you go to hit compile. And of course it's a problem here because I don't have the data's not in there. So I should have no errors and no warnings on this script. It should compile without any warnings or any errors. It's a very clean script, and so it's got 4 settings to it. You have there's it can either be a buy stop or a buy limit, and you can change your stop and your risk. Now you're going to go look for a place that you should have placed it, and this would be set to 12. You can set this to 1 hour. This is pretty critical, the setting, because it's going to determine your exposure out to the future. So you've committed to buy some, the old joke, your whatever is writing something, you have no money. But so you're writing, if you put too many orders out there, and if you do the math, and if every order got filled and stopped out, your count's bye-bye. So you know your risk going in here. And this is a trade plan, essentially. Now, it's not a plan, it's more of a gauge of risk. It's just nothing more than a risk gauge. So go to the charts, and I took my Fibonacci extension tool, which you have to add to your if it's not in there, you have to go to right click on the tabs and customize and look for the Fibonacci expansion and the Fibonacci retracement. I just made the retracement my buy ratio, and this is my sell, and I just took the typical what you see inside of here is all the Fibonacci out of the box. They're going to have default fib numbers. I just made entry at 0. Entry at 1. 0 is my stop, 1 away, and 2 away from the 1 is the 3, which gives me my double your money. Double my money there. Now, I set to how do I know that is set to 100 pips? I would put up this 100 pip grid and scooch that until we are sitting at 100 pips of profit. So I'm going to gauge the history of this for order placement, and would I get stopped out or not, and is it better to trade with one order or 10 orders? So if this is a 1K and you're trading a 10K every week, now this isn't going to be too difficult. I don't know if I'd call this back testing. That'd be kind of this isn't a stretch. This would be my. I'm not going to do 200 back tests. I think that's unnecessary. You should be able to tell whether or not you could have made money yesterday. Now, if I traded this with I'm looking to make 50 pips, it's going to look like this. It's a whole different, with the ratio the same. And here you're going to say, well, on this chart, I'm just going to get stopped out. But you can see that you need a healthy 50 pip stop to make 100 pips if you don't want to babysit the market. Set it and forget your orders. So that's this. Now, if you know that this is the double top back here, right below the 100-yard line, if you had placed an order here, they would have stopped you out. That's why when I said in this other video, like you're buying every pip it goes down, that's the idea. You buy here, you get stopped out. You buy here, you don't get stopped out. You buy. You buy at 10K down here. And now this is kind of a scalp, because in the end, had you put 100 pip stops to make 200 pips, it looks like this. 100 pip stop. You're buying this doji. You're buying right here with 100 pip stop to make 200 pips. If this is hindsight, then I'm sorry, but you have to see that all the trades you missed. If you leave this here and drag this towards your entry, you can see it double your money. I'm not talking triple your money. You could write this triple your money, but I'm just looking for a double your money system. High probability swing trading on the daily. As I drag this forward, that was a good trade with that ratio. Good trade there, good trade, good trade. The first stop out, and the fact that you're not willing to place this order, you'd have to write a script for this though. Now you'd have to edit that script so it's going to only make these 75 pips. It's only going to make 75 pips with a 25 pip stop now. So that order is going to sit right on this double bottom. And that was a good trade. I'm sorry, you didn't get filled on that. You have to move this up. Right here. See how tight that window is? Here, it's genius. You're a genius. So this is about gauging. I'm not back testing. I'm gauging the ATR to the stop you need to make the 100. There's just a couple pips difference. And what makes more sense? You writing up a 25 pip stop, a 50, and a 75. Now if I make a 75 pip stop to make the 150 pips, probably look about like this. Maybe this is what you need. And you place one here. And you could have done this for, how long can you keep doing this stupid ass trade? This is why I say trading's for dumb people. If you gave somebody 3 orders, 3 buys and 3 sells, and I've taken the Fibonacci extension, done the same thing here. How tight a stop do I need? And would I sell the very top tick of that? Top tick Tommy. Here's the scalp orders. They look like this. And on the daily, you're hardly going to... So look at this. Come on. This is why it's stupid, right? Now, if you just said, well, I sold up into the top of that, but see, they stop you out. This is why you got to have... Sure, you have a 75 pip stop on this order. Maybe you had an order up here that never got filled. This is the problem I had, I think, when I decided I was going to do something. One day I thought, well, you know what, I'm going to make something up, sell something in the real world, make some artwork, and I thought, yeah, but what if I make artwork and I have to make 20 pieces and only one piece is somebody's seen, and that doesn't look like crap. I try to pretty the charts up here. It looks like crap. It looks like crap. This was a fantastic trade here. Now this one you would have said, wow, we should have increased the profits on that so we could take it all the way back down there. Well, yeah, you got a 100 pip stop to make 300 pips. There is that trade, but what's hurting my brain is that why can't people see that all you have to do, and this is why I said it's for dumb people, is that all you got to do is, damn it, these objects got to get rid of these. If you're looking at this, and this is your sell order, and you're going to put a 100 pip stop on this, what is so hard to figure out here? Am I back testing this? I'm gauging this risk. I'm gauging risk is what I'm doing. You really have to kind of rename these words, because some of this crap's caught in your head. Well, it's caught in my head. I'm only speaking for myself here. Don't forget, the reason why I sound this, I bitch about the same things. So I'm the same guy. I'm that guy. But here's your 100 pip stop to make 200 pips. I'm saying that even back here, was this a good trade? If this is all you were armed with, is a 100 pip stop to make 200 pips, if you told somebody, I can make you $20 per trade risking 10, look at the lottery. You know what's really lying underneath all my rage is that all these people that are saying, oh, it's just not fair and the market's rigged. Well, let's hope it's fucking rigged, or they would have never tagged this trap up here and you would have never got in at this beautiful fucking price. Let's hope it's rigged. This whole area, 100 pip range, every 10 pips you saw with the same outlandish stop. And of course, this is for people that have a day job. I can't babysit this bullshit. If you come anywhere near this or this, in fact, as it's coming up into this, you're selling into that. You sold here, right? If you placed a bunch of these, now you can just hold down the control key and imagine that these are all, and you can also imagine that if you're trading on the clock, that these are disappearing as time goes by, right? So if this order's sitting up here for 12 hours and there's no fill, okay, this is your sell. I'm using the extensions as my sell. It's blue, it should be red, but I don't know, I like blue. It's prettier. So let me turn on the risk grid. So I'm always worried about, only because I think I see the patterns everybody else is seeing, at least, with the right amount of drugs, but I'm really looking at, and this was a problem when I switched currency pairs, that I didn't realize that currency pair moves a whole lot of pips, a whole lot of dynamics, that I just realized that it was in such a giant swing. I could see the pattern, but I was ignoring the risk of pips, because before that I just traded stuff that was kind of like standard instruments. But these things are kind of like, this is over-the-counter market. This isn't a regulated thing. So these markets are just off the rails. And of course there is the natural 100 pips selling. It's almost like if you were going to try to stock your stock your business, you're going to always order the kind of the checkout aisle stuff. You need some gum. These are like the round handles. So you would just sell there naturally with a 100 pip stop. And you're swing trading on the daily here. And then you would have this one and this one. So you just copy those out. And if you have them here right now, I don't know if we can make it up there. Of course, next week's coming. So if this lasted a day, and then this one lasted a day, and this one lasted a day, and every day you kept putting out there, you may not even get filled on that. This you're going to wait a month to buy. This is a Stapleton buy here. You have the patience of a whatever they call them, like the pulp, right? You're like the pulp, and you got your you're looking to make your risking 75 to make 100, and you're risking double your money. So I'm trying to make 150 here. It's like 150, so you're risking this 75 to make 100, and you're buying here. That's a good fit. So you've either got the same order duplicated over and over, and you do a linear risk, or you're going to make different size tickets. You could also say, I'm going to get in on stops. Now those are all, if I place the order right now, those single drops, if I place them down here, they're going to be buy limits. But if I place this order right up here, it's going to take me in on this fractal to the upside. And the market cannot revisit that area. So if I traded with 100 pip stops, this is why people are like, oh, I'm making money on that. I think the fear is, there was a guy about 2 or 3 years ago I met on Skype, and he was trading 100 period moving average crosses the 200, crosses the 50, and he was told to buy. He bought some system for $2,000, and I said to the guy, he's trading too many lots. And I said, why are you trading too many lots? And he goes, well, I'm risking 2% on my account. And I thought, wow, okay. But what if you took your mini lot and cut it into tenths? It would allow you to run this size, this size, this size, this size. Also, allow you to run your super wide risk. So you're risking, say 100 pips per ticket, and maybe you don't fill every ticket. Right? That's the trick. And so you can have all these things pending out there, and when the news comes out, or whatever this move is, it is such a brutally, it's such a vicious down move. I think anybody can draw a trend line on there, but without that, even without that trend line, down here it works. 100 pip risk to make to here, and this top becomes the bottom, blah blah blah. But right now you can place it here. I'm buying if it goes here. My target's up here. My stop's down there. It's just risk. It's just risk. There's nothing magical about, well, this is the last known bottom down here. It doesn't matter if you're trend trading this. You're just buying. If you place it down here, you're getting in on a limit. If you place it up here, you're kind of chasing. But if you place it right here on the top of this thing, and it lasts the next day, it goes up and it never looks back. As you can see, if you would have just done that back here on the first pullback, they didn't stop you out. They didn't hit your target. They didn't stop you out. And this is the trick. How tight should the stop be? So if you run 25 pip stops, they look like this. Right? But think about the guy that's, as this is going up, he's getting in on pullbacks with just the right stop. Okay, Goldilocks trading. Goldilocks trading is a lot better than Holy Grail trading because there is no Holy Grail. Look at this pullback to this. You can't tell me. Like, if you can't just drag this over, find a top, drop it on. Does that work? This would have been a buy stop. You would have filled. It can't kick back any lower than that, and it didn't. The next day, it never kicked back. And if you don't like to chase stuff, which I don't like to chase, I prefer to, if I'm in traffic and there's some hot babe, I prefer just to hit her car, smash into her car, and just, since I have so much money from trading, I would just say, baby, I'll drive you home. It's going to be okay. But so you pick out this stop, and you can have the scalps in there too. So you have one of these as a scalp order, and you could call it scalp, or I just like to look at the numbers. I just want to see this list of risk to reward ratios in all different time frames. So you create a whole palette, and the way you do that is once I post this thing, you keep on coming up to the you go to hit the function key, F4 key on your keyboard, and just keep saving as now. So now you're going to just say save as. You're going to pick the risk, and then after you pick that, you'll see the title of the script come up on the top, and what you're going to do is, depending on how far you want to go, you describe it up here with 2 forward slashes in front of it, or you probably maybe want to edit the comment line so it matches what it's going to say. I don't have the risk in here. I could put the risk to reward ratios in here, anything you want to do. And of course, I don't know if this is able to dump out to a spreadsheet. I don't know if you can take your account and spit it out. I don't know how that works, but I guess I should have taken a spreadsheet course. I can tell that much at least. I think it's the only thing. I don't know if I can do the home study course of that, but sure, why not, right? And then so you have this. This is the very first original version of this. If you go on the internet, this is how it was described: was drop underscore pending by, and I started to add the size and the length of. So here's a break-even scalp. Risk 15 to make 15 in 4 hours. Kind of written a million of these, and here's a scalp, right? 1 hour, 6 hour, risk 8 to make. Now this might work on maybe the really low ATR markets, but look at this. These entries, as you're looking back, and you also look at it from a stop entry standpoint. So anytime if you place sells in here, you're looking for the market to collapse down some more, then you would put the sell in like this. Below where we're at, your entry is your this would be a sell stop right now if I dropped it here, and it can't go any higher than that. So if you're going to use that, well, I'm going to put my stop on the last known, but at least this you can say, well, I'm willing to risk 25 to 100 pips on 3 different tickets. So you have 3 buy tickets, 3 sell tickets, and you could certainly do where you're going to risk 4 to make, you're going to risk 1 to make 3. So let me put that in here. So just imagine you're going to really get greedy here. And this is why when the news comes out, I don't know why people aren't placing 1Ks on the news. Like this idea that what this comes down to, again, the same thing that I'm trying to rattle people's cages about, is that people say, well, I trade a 50, half a standard lot, and that's my thing. And they're living in that world. But have your 8-year-old son place these orders, right? You tell him, listen, you see this zigzag crap, and you see where there's any kind of extra zigzags, just place all these orders up there. Or if you see a top, if you see a mountain, put and if the market was up right now, you could just take your order and drop it right on this, and it's going to show up where it needs to be over here, and you put it here. And so the other video, I said, who's not buying down here? Yeah, well, who's not buying down at support is what I'm saying. And whether you're here to see this happen, the beauty is when you come home and you got money in your account, because you got, now this is going to risk 100 to make 300 on this. You're risking 100 to make 300. Is that trade available? How often does that show up? Now, I guess you'd call this back testing, but I would call it back gauging. I'm not back testing a strategy. I'm back testing a pip risk. I don't know if that's even possible, because the setup, this is why I said back testing doesn't work. I'm assuming everybody's talking about this back testing. People will make sure that Gartley works. This is just about make sure 100 pips is enough room. to make 300. You're going to have to wait a long time to get paid. So that's where the patience comes in. Had you bought in a stop here, right here, they did not stop you out if you never moved your stop. Now, if you moved your stop to break even, now here's a prime example, and then I'll let everybody go about their business. And this has got a terrible spread. Some of these, even in a terrible spread market, you're going to make money. It's got a 100 pip stop. You're risking $10 to make $30. Okay. I don't know if that's possible for a girl could do it. A guy probably couldn't because he'd be like, I don't know if any man out there has owned a car, but when you get in the car, you're like, oh, what's this little gadget do? A girl gets in the car, she's driving it to get groceries. She's not seeing how good it can handle on a turn. And this is where you can lose a lot of money. So this is how I've when I made my billions, how I lost my billions was, well, let me try this. Over giddy about a concept, I launch it, boom, account be gone. And there is the good old-fashioned, you know it works. Like if your life depended on your next trade, okay, listen, I already, you know, the old joke, right? How do you make $1 billion trading? Start with $2 billion, because your day job pays good enough that you can have skin in the game, so to speak, on the Forex thing. And you could say, oh, I don't care if I lose. I've already got enough money. This is my play money. Another thing people say is, don't play with money you can't afford to lose. No, you have to play with money you can't afford to lose. I just want to flip everything upside down that you've ever been told. Don't play with scissors. No, run with, I'm saying run with scissors is what I'm trying to say. You just have to. Because you got to know whether the floor is slippery or not. How are you going to know? Well, you don't have to run with scissors. Yeah, but it's a different kind of running. I mean, I'm also presupposing you know that what you're doing is dangerous. But that's where you, in other words, if you've got this 100 pip stop, you're like, come on. And you know the news is coming out and all this bullshit and all the speculation and right? How did the guy that put a order up here not make money? Put an order up here to sell right up on that tippy top, or like I said in the other one, every if you're trading 100K, why aren't you putting all these cells in? You only get tagged on a few. The ratio's set. And of course you're going to wish, oh, I should have put a 300 pipper on that. But this one here, this is a hell of a trade. Now, did you get, if you placed it at this bottom here, did they blow you out before you hit your target? Yes, they did. That's now, if you just place 10 orders 10 pips apart, you're risking $100 to make $300. It would look like this. You have a buy limit. You know this low exists, so you buy into this. And I guess you could have got out of that with a little bit of money. Yeah. But if you really stuck to your target, so you have this order here, and it would just look like this is your next one, and you're buying this. You're buying, this 10K. Market comes down in, and dippity-doo, it swings out. That's all I'm saying. I'm saying do not trade, and I'll be saying it forever. The guy in Germany that I talked to years ago, he's like, well, I'm getting in a 10K. 10Ks, 2% of my account I'm risking on some dumbass moving crossover system. Where this where support has proven to be support, it's also proven to be the fake out trap. How many times have we seen this? The fake out trap trade. So this is the breakout, and we broke out for a little bit here. Look at this breakout. Uh-oh. Go the other way. Now here you never hit target. So maybe you got your 100 pip stops, your 75s, your 50s. If you make it too tiny, then the daily chart's not going to fit the order placement. So I would say gauge the entry for this. Would be a beautiful thing. And every time you write another script, you got to consider, what is your threshold? Do you want 20 pips is my tightest stop to make 60, and on and on, and just create your own library of risk. And it's really a risk library, or a risk box. There's nothing magical about, I just consider it to be a waste of time. You can also just flip this around. Here's your cells up here. If you trade that both directions, back towards the center. So it's always going to be sell high on limits, and we could sell limit right here. Sell limits here. But I'm just talking about cutting your thing down to now. The other stuff that I normally post is just going to say drop an auto grid of a ratio, because what if you want to do this, if you want to set this like this, where you do have multiples of this, and you do the same thing every day, where you buy every 20 pips of plunge every day, and you could do that next week on this. What would it matter, right? You have 12 hours of every 50 pips you're buying, and you go across all your currency pairs, and you're looking for, the entry. And so here's the pound to the U.S., and this is actually just before this Brexit vote. Look at this bid up here. You can see on this currency you need to put in monster stops. You need to risk here. You start selling. They already stopped you out with a 150 pip stop there. Was this a good trade? And you would say, oh, I should have put my targets way down here. This is 1 or 2 days of smash down. So this guy's just talking about, well, I did after that Brexit. I'm like, well, so 2 days smash down. Like, if you didn't show up for 2 or 3 days here, you didn't even know about Brexit. You could have gone on you could have traded like, even if you lost on this trade, look at all the dumb range trading down here. On and on. On and on. Up and down, up and down. From this exit to this. So you're trading both directions. Completely non-directional trading that. Buy, sell, buy, sell, buy, sell. You just bought here. You just scalped the wick of that. That's a 50 pip scalp. What's wrong with that trade? How does it fit into the narrative of Gartley's and bullshit? All you did was buy here with a 100 pip stop. Under the world stop, this is actually set to a insane ratio. You bought this new low here. I don't know which came first, this high or that, but see, this is what you're doing. You're gauging risk. Do you want to buy on? Do you want to buy on the edge of the market there? Do you want to buy on the edge? What would it be like to buy this? What would it be like to buy this support level here? What size ticket do I need to ride that dead cat bounce? That's the question. Am I going to back test this trendline break bullshit? Well, no, you're not going to back test that. No, how are you going to get in that? So you broke down, and how big is your stop got to be? Right, we've seen that pattern a million times. A million times. Does this trend line break here and Does that break and then it finds resistance and then it tanks? Yeah, but if your stop is too tight, my point is if your stop's too tight, you're taken out. Do you have to back test that? No. That's what you know. So where are you going to buy now? Down here. So you make your exit the floor. So you know you're almost picking where you get out before you pick where you get in. Because you know when you want to buy low, but where do you want to exit this thing? So your profit's going to be up here. And then you'd have to keep dragging that down to see. And you just place a whole basket of orders down here. Now here, if you started buying the new low here, they took you out. But you're willing to accept 100 pips of risk there. Now you had to look on the monthly to see that it probably was that this was the place you would probably, when the market starts to go off the rails like this, you're going to look back at the monthly for this this low back here is your reference to start buying. So they could have trapped it down here. I don't know what the this could be the trap. So we could be in a trap right now. Certainly this initial trap here made a nice amount of money. So if you say you had your stop here, and this is a whole lot of pips, but this is where we cut back up, and then people that are getting out at the floor, just like if you bought down here, you're going to get out at this floor. So you're just going out from the market, and you just don't care. You would just place those orders out there. Maybe they last all week or something. I don't know. Or every day you just gauge how much the market's plunging. Pound yen, same thing. So just this, it's all about risk to reward ratios. I don't think it really has too much to do with anything else, really. New Zealand yen, 100 pips. So this is where you would say, oh, I can handle 100 pips of risk. And here you can risk maybe 50 to 100 on New Zealand pound just because of the, you can see it, you know. You can see your, how wide a stop you need to trade with. If you're going to enter this tippy top back here, you needed at least a stop up in that. And then you just find how many pips is that, and is that appropriate for the currency you're trading? If you go to the monthly, now this is like the Brexit of the, yeah, these trades are going to happen to you. This thing with the Brexit, there's no way you're going to, you have to know that markets would, look at how bad the New Zealand got hammered here in 2008. Now, if you're aware of the fact that you're going through new country here, and this, once you take this out, look out. But now we're above that, right? So this is the kind of a giant trap trade, but once again, had you properly sized your entries, you conceivably, and this would take a lot of this monthly chart. So you have, like, if you start buying from here all the way down, and you held through that, you're at break even by here. Well, not break even, you're still underwater on this triple top, but if you held all the way through to here, and you never got stopped out because your stop was 3,000 pips away. Now you're a position trader, I suppose, or swing monster swing trader. Look how well you did on that, and it comes back to the last support that was supposed to hold. And even the counter trend, now a lot of people would think, oh, here we're just going to, you know, after that big down move, obviously it's a bearish market and we're going to keep coming down, but no. Look at this sideways consolidation here. Now that's 2 years of pretty heavy trading, and if all you did was range trade that, people are kind of drawn into this kind of stuff because the guy that sold here is like, yeah, I mean, this is when the British pound was tanking. Everything was just complete reset. This is the reset, right? Before the YouTube people would talk about big reset. But I don't know what's going in the long run. I wouldn't care. you can't care about that. Dollar CAD, you can run 100 pip stop here all day long. Get this beautiful kickback. Australia to the yen. Yeah, this is daily. ATRs aren't bad here. Some of this stuff, ATRs are kind of serious here. Here's a real easy breezy, kind of calm market. At least for the moment. Look at this vicious kickback here. Another instance of just placing an order at the last known low. They pick you up on that. That's the weekly. This is what it looks like here. And if you bought every day, that pulled back. Another instance of debunking the myth of, well, I'm waiting for this special. No, just keep buying, buy. As soon as it goes up, stop buying. You ride it till you're no longer underwater. You hold. How'd that trade work out? It's really death-defying. Here's a nice trendline break, crossover pullback setup. Doesn't get any better than that. And now it looks like they're attempting to go up here, but plenty of scalps available from the south side. Right there, plenty of scalps. Just lay them up there. It doesn't. Nothing you do is going to change the risk ratio on that. As you picked it up front, you get to choose, and you could choose just not to trade, and you're not going to get. But the probability that we could retest here, you're always placing your orders at the feeding zone, this 100 pip window. Just like it'd be. Another thing is you can look for the bulls targets. They're probably going to project their channel up here. Well, you just place your orders up there. Now, some of these are going to get stopped out because they're going to be just maybe the market goes into this this move, but let them stop you out. Right now, it's better not even to watch this stuff happen. I guess in a way, better to just not look at it because. Say you bought here on this New Zealand CAD and you thought, well, I'm just going to, it's in an uptrend. All my moving averages say up. So I bought this pullback. This is supposed to be the top, becomes a bottom. So I bought here. I'm like, damn. But look how the respect for the 100-yard line seems to be more of like, okay, we need to get this price before we can really go up. And this counter trend trade here, this is the argument for counter trend trading makes money. This is how it's proven to be a fact. So this monster pullback, this is like 400 pip pullback. But definitely this was and look at this beautiful smack back wick. And you don't even know, and these moving averages people are running, they're based on closing prices. So even your 2-period moving average, let me just put a 2-period moving average up here. You can see with the difference here. Let me put a 3-period up there. So you look for moving average, and I'm going to put a different color for that. So here's a 3. We'll make it turquoise. I'll make it fatter. So look at that overlap there, and you never really get that. That's about as smoothed out as you want to get. You can see the crossover here. That was the robot that I built that made a bunch of money. It buys when the 1 period cost is the 2. You see how that works? And it just keeps buying. I don't know if there's a stop on it. It can blow up real easy. Color just sucks on that moving average. I'm just gonna make it black. So you're long here. This is, you're long. You go long. You go long. You get chopped. You go long. Now here it would sell. But you can imagine the 1 period moving average. As soon as you start to go, and these are all based on close, so it doesn't even take, if you put a 1 period moving average on the highs or a 2 period moving average on the highs, just so, because people are drawing their trend lines on highs and lows, but why don't, if you were to see, go to your indicators and take this and put it on just the highs. So that's a 3 period moving average of high. I mean, really? Isn't this how this Kenter channel and all this stuff started? People throwing all this. Look how messy this is already. It's ridiculous, right? It's just ridiculous. What are you going to do with that? Oh, look, it went up. I'm already seeing the signal for me on this system would be sell if it goes above the high. It's really overbought if it... But you'd have to have the order out there. Hindsight is no good for... You have to know the style of order you would place. If you said, I'm just going to sell at the market, are you going to really be there for that entry? So, I don't know. That's my single drop. And to make that a sell order, you have to change the I think it has to say sell in there on the editor. The sell version is everything's the same except for it's going to have to say sell in here somewhere. So where I have buy limit and buy stop, you just change the words here. And I think, I'm not sure, you'd have to check to see if anything else has changed in there. I think that's all you do. If not, there's sell drops. There should be a sell drop sitting at that MT4 script trading thing on Google+. But yeah, that's the only way I see to make money in Forex is to place the orders and gauge the risk. And that's why I did the ATR video, because the amount of movement that these markets can move is going to be a big deal. And here is a failed collapse here, so you would have made all your money back on your other trades. You bought every 100 handle here with a 100 pip stop, and they stopped you out of 3. And if your ratio is set to make 500 pips with a 100 pip stop, you'd have all those in there. You'd have to wait 2 days to get paid on that. Or maybe you have a 200 pip stop to make. So that's where you have a 200. You're risking 20 to make $40, and you place that on a separate account. You have a sell limit here. You're risking 200 pips to make this, and you have a separate account, and you get filled on that. And if you see that you're coming back to that, you're just not getting there, and you're just going to take the money and run, there's no harm in getting out. If you have a, just because you have a 200 pip stop doesn't mean that you have to take the triple your money. You this is like an end of the world stop in a way. Now, it's almost like trading without a stop because they're really 200 pips. If you sold this high, if you got in kind of early on this sell, and you have a 200 pip stop to make this, then right, that's great. Even there, you have a sell stop, same script, 200 pip stop, and you're running like that. So it's really about how much you want to risk per ticket, and then just go the extra mile and place more orders. That's all I'm saying. Just place more orders. In a nutshell, just place a lot of orders and just gauge the current volatility. Dollar yen, kind of a tame market compared to the guppy or something, or some of these other nutty instruments. You got this is the Singapore against yen. I think of anything here that's really nuts. There's a nice bounce there. You don't have to predict these markets, but you do have to gauge the risk.